Can you switch lenders when going through the home buying process? Is it okay? Do you owe them anything? In today's video, we're actually going to address that question. We're going to tell you if it's okay to switch lenders. We're also going to talk about the potential cost involved by switching lenders. And we're also going to tell you how to avoid this to start with. How do you avoid putting yourself in a position where you don't have to switch lenders at the last minute? Now, if you're watching this going, why would I have to switch lenders? How do you get yourself in that predicament? Well, one of the scenarios is maybe you're buying new construction, you go in to purchase that property and they say, hey, you have to get pre-qualified with my lender. And then you get in there and after you get pre-qualified, you want to start searching other lenders and not necessarily go with that lender. Another reason might be that rates pulled back, they changed, they've gone down since you last got pre-approved, maybe since you've locked your loan. Maybe the lender is just failing to get their job done. There's a lack of communication in the process. You're not happy. They're dropping the ball all over the place. You're in a position where you might end up losing the contract if you don't switch lenders, or maybe even better yet, they're doing some sort of bait and switch on you where they tell you one thing and then they're trying to change the terms at the end and you want to switch lenders. So can you switch lenders when you're going through the process of buying a home, refinancing, getting a loan? The answer is yes. You can absolutely switch lenders, but there are some things you have to consider, like the cost that I mentioned earlier, as well as how it could put you in a predicament, if you will, where you could end up losing the contract to purchase that home. Now, earlier in the video, I mentioned some scenarios that you might be in where you're looking to potentially switch lenders. And probably the most common of any of these is that you went out, you got pre-approved with a lender, you were quoted an interest rate, and since you've been quoted that rate, interest rates have adjusted. You're now in a position, at least you're looking online and seeing articles and hearing from friends and family or what have you, that interest rates have gone down and you want to be able to take advantage of that lower rate. Well, the very first thing you want to do if you're happy with everything else your lender is doing before you switch is call that lender and have that conversation and say, hey, listen, when we originally locked in the loan, it was at 6%. I've seen that interest rates are now at 5%. Is there anything we can do? And that lender might come back and say, no, the loan's locked in. We can't do anything. Or on the other hand, maybe they say, yeah, we can actually lower that rate. We have an opportunity here with this lender to lower the rate. Or maybe even in another scenario, they say, yeah, we can take your loan to another lender and lock it in with that lender and take advantage of the lower rate. Now, the caveat here and some of the costs that we're going to talk about during this process of switching lenders is an appraisal. When you go through the process of buying a home and or refinancing, typically there's an appraisal involved. The lender wants to verify that your home is worth what they say it is, and they do that by having an appraisal on the property. Now, you as a buyer are responsible for the cost of that appraisal. So, if you're calling a lender and getting a quote, because you just went into contract and they're trying to, lock in your loan and order the appraisal the first day, in many ways, they're probably trying to lock you in as a client. And so you need to be a little bit wary of that. Sometimes time frames are very short, things move very quickly, and they need to get you locked in quickly. So it's not always a scenario where they're trying to get you locked in and paying that cost, because what happens is once you pay that cost, you do feel a sense of being locked into that lender, and that lender likes you to be locked into them, right? Because that way they're not going to potentially lose that loan after working on it, and they know that there's, almost a guaranteed paycheck coming in. But in the case that you decide that you want to switch lenders, maybe go a different direction, if you do end up going with a different lender, you're probably going to have to end up ordering another appraisal. That appraisal is going to once again cost you more money. It's going to cost you potential time because the lender's got to go out there and verify. If you're buying a home and there's a real estate agent involved, the real estate agent's going to want to know, well, you already got one appraisal. Why are we getting another? So there's some scenarios there that could cause some hiccups in the process. Now, the caveat to that is if you're getting an FHA loan and or a VA loan, that loan can be transferred to the new lender. But if you're getting a conventional loan, that loan is going to have to stay with the current lender in many cases. Now, if you're just starting the process and you just went under contract and you haven't locked in interest rate yet, it's really easy to switch lenders. There's not really much you have to consider, other than calling other lenders and shopping around interest rates and finding out what they're offering. Now, if you're one of those people that likes to shop around, want to know how to compare rates, do me a favor, check out a video here. I recorded it, to go over that process with you to help you understand how to compare lenders to one another, because it's not always about rate. It's not always about just certain fees in there. It goes a little deeper than that, and that video will guide you in the right direction. But one thing I did want to mention and make very clear is that another hiccup, another thing that, could cost you in this process, and I touched on it briefly, is time frames. If you're locked in with a lender and you're going through the process and there's a lack of communication, the lender's dropping the ball, maybe even saying that you're not approved for one reason or another, because it does happen. Even if you go through the pre-approval process, occasionally you can get under contract. Maybe the lender didn't do their job, or there's something that happened on your end, and they could end up saying, hey, you're not actually approved to buy a house, and they're dropping the ball. And maybe you've already done your appraisal or what have you. Well, if you decide to switch lenders at this point, there is a cost of time involved. And if you're buying a property and you have a 30-day time frame and escrow period, that's pretty traditional when it comes to buying property. You could end up putting yourself in a position where you're not meeting the deadlines on that contract. Many states out there, California, for example, has 17 days to release contingencies, to release the appraisal contingency, to release the loan contingency on that property, and could even be shorter in some cases if you've changed those to buy the house. And if you're not meeting those time frames, by switching lenders, if you will, then you might be in a position where it's time to release those contingencies and you haven't gotten your loan approved, or you haven't done the appraisal because you decided to switch lenders at the last minute. So understand, while it's okay and possible for you to switch lenders, you need to understand that there could be cost involved, money actually coming out of your pocket for the appraisal, and also cost involved with regards to time. And that time could end up costing you the contract, especially if the other side isn't going to grant you additional time if you need it. Now, when I film videos like this, I always want to be clear, these aren't normal scenarios, but there are ways to avoid it so that you're not putting yourself in this position while you're actually going through the process and figuring out the last minute that, hey, this lender's rate is really high, the communication's bad, they suck, I don't want to move forward with them. And that's by doing your homework up front. And what I mean by that is getting multiple quotes prior to going into the process. Now, the video I mentioned earlier where I talk about shopping lenders, I touch on it briefly, but you need to go and talk to, say, a bank. You need to talk to maybe a credit union, if you will, and talk to a broker and compare the three. Not just look at the interest rate, not just look at the fees, but also look at how they're responding to you. What's the communication like? Are they calling you back on the weekends at night to answer your questions? Did they understand your questions? Do they know them? Because if they're a lender that's kind of pushing you off, telling you, yeah, it's okay, and not really giving you the answer you need, then that's a lender that's probably going to handle the transaction much the same way. So you want a lender that's going to hold your hand, walk you through the process, answer your questions, but also give you competitive fees and rates. And by doing your comparison, you're up front, you're putting yourself in a better position that once you actually get a contract accepted, you know who you're going to go with, and you have an expectation, an idea, for one, that you're getting a good deal because you've had other people, to compare it to, but also you have an idea of how they communicate, how they work, and from there it should be an easier, smoother process. Now, if you're watching this wondering, how do I get in touch with a lender? I don't really have one. Do me a favor, I put a link in the description below. Lenders that I know, like, and trust can guide you through that process. There's no cost involved. It's a free process, so check out that link. Now, earlier in the video, I asked, is it okay to end up switching lenders? And the answer is yes. And then I also asked the question, do you owe them anything? And the answer is no. You don't owe a lender anything if you don't end up closing with them, right? It's part of the job. It's a sales job. We don't get paid as lenders, as real estate agents, until the deal closes. Now, none of us want to lose a deal, but if we don't close the deal, you don't end up owing them anything. So if you're in the process, you don't like your lender for one reason or another, they're not getting the job done, their fees, their rates are too high, you decide to go a different direction, you don't owe that mortgage person anything. So you can move along, go on to the next guy, or girl, with a clear head, knowing that that's who you want to go forward with. But just understand, like we said earlier, there's some out-of-pocket cost and the time cost that could make it a bit more difficult in the decision-making process. So I hope you found some value in today's video. I would love to know your thoughts. Have you switched lenders in the past? What have you experienced out there? Are you actually getting multiple quotes? Do me a favor, leave it below. But if you're watching this wondering how you can save money potentially on your interest rate, your monthly payment, do me a favor, check out this video here. I dive into it in more detail.